Hey legends, welcome back to the channel. I hope you're all doing exceptionally well. I do want to say quickly before we jump into the rest of this video, I do apologize for not being consistent over the last couple of weeks on the YouTube channel. I've had a little bit going on and I will be moving back to the Gold Coast, which means there is so much content coming for you guys. I've got a lot planned. I'm very excited to share it with you as well. So make sure to hit that subscribe button, hit those notifications so you can keep up to date with the content. And also, I will have to say, I will be implementing, once I'm back on the Gold Coast, daily live trading sessions. So every single day, Monday to Friday, I will be trading live in front of you guys on the foreign exchange market. So I'll be trading all of the major currency pairs, GBP, USD, Euro USD, AU, NU, and a few others as well, USD, CHF, USD, CAD, maybe USD, JPY. We'll go through the entire watch list together. I'll go through my fundamental analysis and technical analysis and then identify any potential trading setups. So make sure to stay tuned for those. So I'm not too sure if you guys have noticed, but the start of September has been really slow in the financial markets. Usually it's the case every single year, and we're going to dive into the reasons as to why that is. Myself personally, I have not taken a single position in the last 2 weeks since the start of September. So I just wanted to mention before we dive into the rest of the video, if you haven't taken any positions, or you have taken a few positions but they haven't been big winners, or you're on a bit of a losing streak, whatever the case is, if you've been struggling during September, that is perfectly okay. You don't need to compare yourself to others, especially those on social media flaunting all of their big winners. Everyone's on a different journey. It's a case-by-case basis, really. Everyone has a different strategy as well. So the setups that they're seeing may be setups that you would look at as really risky and often doesn't work for you. So the best thing about this is if you haven't been taking positions, you are following your plan, you're following your methodology and your strategy. And there are times, just like September right now, that your strategy doesn't provide setups, and that's perfectly fine. But that's why you have a risk mandate. That's why you have a methodology and a set criteria in place to be able to identify whether it's suitable trading conditions to trade or not suitable trading conditions to trade. And the fact that you've identified that it's not suitable is the biggest win out of the entire situation. Taking a bunch of trades that aren't good trades is not better than not taking bad setups, and whether you're up or you're down. So we're gonna get into the rest of the video now, so make sure to stay tuned right till the end of the video. Firstly, before we get into the reasons, let's talk about something called fundamentals. Fundamentals are things like interest rates, inflation, job data, or big announcements made from central banks. And these are the real world events that influence currency valuation. So they're the reasons that price goes up or it goes down. And as traders, it's really important to keep up to date with these economic indicators because it allows us to understand where price action is really going and why it's going. When you just trade technical analysis, you're sort of trading blind to a degree. Yes, obviously you have your strategy in place, but macro moves markets and technicals is what define risk. So it just makes it harder to fully understand the behavior of an asset that you're actually trading. Now, the first reason that September feels slow is we've just come out of summer holidays for America and Europe. So the big players in both London and New York, like the hedge funds, the banks, the investment banks that trade on a proprietary basis, the institutions in general, aren't fully back at their desks yet. And with fewer traders active and institutions active, prices don't move as much. Now, the reason why we have different FX trading sessions and why everyone explains and expresses the importance of trading the right currency pairs in the correct FX trading sessions is because of that reason. Just say I'm trading GBP USD in London session. The reason why it's better to trade that pair in London session as opposed to Asian session, for example, is because those institutions are active, their operating hours are active during that time. That's when the most amount of volume is occurring because traders are at their desk placing orders. Secondly, September is a huge month for central banks. The European Central Bank, the US Federal Reserve, and the Bank of England all have important meetings in the middle of the month. And until those big decisions are made during those meetings, most professional traders don't want to make large decisions until those decisions are made. So that could add to the reason why price action feels like it sort of drifts and ranges at the start of the month. And the third reason sort of stems from the second reason. It all relies on uncertainty. When traders are waiting on massive news events or catalysts or data releases to present and to occur, there's much lower volatility because people are uncertain, traders are uncertain. And usually during those times, you'll find the price of gold actually pushing higher because investors use gold as a safe haven to protect their assets. So the reason why price action again could be ranging during the start of the month or leading up to those massive catalysts is because traders are uncertain. So they're waiting for the result of those catalysts to occur before actually implementing their positions or whatever plans that they have. And the fourth reason is that the economic indicators are still mixed. Inflation numbers are cooling, but not enough. And growth numbers are uneven. So nobody's really sure what central bank will move first. And again, bringing us back to the topic of uncertainty, when traders are unsure what the next steps are, they usually tend to stay on the sidelines until there's some clear direction as to what the next steps actually are. And the final reason is the price action of August usually carries on to the start of September before price tends to pick up again. You'll see all over social media, a lot of traders, they talk about the price action of August actually being the worst trading month of the year. For me personally, I had a great month. I took a lot of positions during August, and it was really a time that I could capitalize on the opportunities that were presented to me. And it really goes to show exactly what I said at the start of the video. It really comes down to your strategy, your methodology. What works for you might not work for others. For a lot of traders, August was a terrible month. For me, it was a great month. So far in September, trading has been shit for me, but it's been really great for other traders. So don't get caught up in comparing yourself to other traders. You really need to just get good at identifying when to trade and when not to trade. What works well with your strategy and what doesn't. If there aren't any opportunities being presented that's in line with your methodology and your criteria, don't take the setup. And that's exactly what I've been doing at the start of September, staying patient, sitting on my hands and waiting for that opportunity to present itself. And although this was a very basic explanation of fundamentals and the current economic situation of the foreign exchange market, make sure to hit that subscribe button, hit that like button, turn on the bell notifications if this video has helped you in any way. And as always, if you have any suggestions or questions, make sure to put them in the comment section below. That is all for now. I hope you all enjoyed this video, and I will see you guys on the next one. Cheers, guys.